So I've been keeping my traders, my Skinny in the Markets members, and my Trifecta Trading Club members on this short side of the market ever since it started to break below those levels from early September. Now, this right here is the E-mini S&P 500 futures chart. So that is the December 2023 contract, and we're on our way lower. Now, you might be wondering, how far down are we going to continue going? So if you're new here, I'm Hema Reddy. I use price, time, and something called market timing to help boost my trading and that of my tribes. And I thought I'd experiment giving you a quick forecast here, right? So I'm just gonna pause the screen for a moment and I'll be back with that forecast. All right, so here it is. You can see that we're coming up into it. We're just a day out, and the forecast is for these futures contracts to trade down to 4310 into Tuesday, September 26th. Now, you might be wondering, well, what if the forecast isn't hit exactly in the nose? How do we know if it's going to get there? All of those details I teach in my full approach in the loss forecasting trading system. One thing I can look at right now is the actual price action that's unfolding. So I'm going to take us from this daily chart to a 60-minute chart, an intraday chart, to get a closer look. So here's the intraday chart currently moving. We're in the last hour of Monday's trading, and you can see that there have been a couple of large green candles over the past few hours. Now, my approach to candlesticks is something that has a twist on it, a nano twist, I call it, using Gann techniques. And what this is telling me right now is that the market is starting to kind of pick up a little bit of short-term bullish steam. So it's very important to recognize when you're talking about short-term strength versus long-term strength. So looking at the action right now, what I really need to see to have confidence that bulls are going to take over for further recovery is a break above 4379.5. So that's the high from the hour ending 4 a.m. Eastern that came into this morning's session. You can see we came close to it, but we backed off. This brings up another important point about support, resistance levels, and even forecast, guys, all right? So this forecast to go down to 4310, that has been in place in my trading and my charts for a few weeks now. But that doesn't mean it's going to be hit on the nose. This move that we already had down to 4338.25, right? That could be it. The market could stabilize there and rush up higher. So you need to monitor the short-term support and resistance levels to help you determine what is going to unfold. Now, if I had to bet right now without having the market finish closing or without having a chance to evaluate the overnight and write my Tuesday report, I would say this. Right now, the signs are pointing to further short-term upside, perhaps a move up towards that 4379.5. But then you can see down here my favorite momentum indicator, the RSI power zones. Well, they're going to move back into their bear resistance power zone. So basically, room for a little bit nudge higher and then perhaps one more move lower into the 4310, or at least an attempt to get there. So that's just my sort of instant snapshot. Look at this right now. Because I'm an ES trader, I will look at this in depth after the market close. I will write a fresh report on it Tuesday morning for my Skinny in the Markets members. And those of you who know my Gann candlestick and loss forecasting techniques will be able to manage the forecast I just mentioned and continue to study price action as it unfolds. So there we have it. Again, a forecast for a move down to 4310 into September 26th. That's what's the magnet pulling on price. But we got to monitor the short-term support and resistance along the way to see if it unfolds. Catch you next time.